Ever dreamt of making money while you sleep? What if I told you that you could earn a paycheck without lifting a finger? Stick around to find out how. Welcome to the wide and wonderful world of dividend investing with index and ETF funds, where your money works harder than a hamster on a wheel. First, let's talk about the stock market. Imagine a bustling marketplace, but instead of buying tomatoes or fish, you're buying pieces of companies. These pieces are called stocks. Now, some of these stocks come with a little bonus called dividends. Think of dividends as a thank you note with cash inside, sent by companies to their stockholders. It's like getting a birthday card with money from grandma, but it can happen quarterly or even monthly. Now let's talk about index funds. Picture a basket, but this isn't your ordinary picnic basket. It's a magical basket that holds a collection of stocks. Index funds are like these baskets, and they track a specific index in the stock market. For example, if you buy an index fund that tracks the S&P 500, you're essentially buying a tiny piece of the top 500 companies in the US. It's like owning a mini America in your investment account. Do you want free shares that could be worth thousands of dollars? Check out the links in the description. And if you liked the video so far, subscribe for investment and entrepreneurial insights, and suplex the like button. So, there's a special type of index fund called an ETF, or exchange-traded fund. ETFs are like the cool cousins of index funds. They can be traded like individual stocks, but they still hold a collection of stocks inside. It's like having a transformer toy that can change from a robot into a car. Best of both worlds. The evolution and popularity of ETFs. For nearly a century, investors have been drawn to the allure of mutual funds. These funds offered a way to diversify investments without the need to handpick each security, providing professional management, cost-effectiveness, and convenience of daily liquidity. However, as the financial world evolved, a new player entered the scene: the exchange-traded fund, or ETF. What makes ETFs stand out? ETFs built upon the foundation laid by mutual funds, but introduced several enhancements that made them even more attractive to modern investors. Trading flexibility. Unlike traditional mutual funds that trade once at the end of the day at their net asset value, NAV, ETFs can be traded throughout the day, just like individual stocks. This real-time trading capability allows investors to respond swiftly to market movements, ensuring they can buy or sell at prices they're comfortable with. Diversification and risk management. ETFs offer a quick way to gain exposure to specific market segments, be it sectors, styles, industries, or even countries. With the vast array of ETFs available today, investors can easily diversify their portfolios across different asset classes, from stocks and bonds to commodities and currencies. For those with significant holdings in a particular sector, ETFs also offer a way to hedge risks. For instance, an advanced investor with a large stake in the semiconductor industry might short a semiconductor ETF to offset potential losses. Cost efficiency. ETFs often come with lower operating costs compared to traditional mutual funds. This is partly because many administrative and service-related expenses are borne by brokerage firms rather than the ETF providers. Additionally, ETFs avoid certain fees associated with mutual funds, such as redemption fees. Tax efficiency. One of the standout features of ETFs is their tax advantage. While mutual funds might distribute taxable capital gains to investors, even if they haven't sold any shares, ETFs generally only incur capital gains taxes when the actual ETF shares are sold. This structure can lead to significant tax savings for investors. However, the tax nuance. While ETFs offer notable capital gains tax benefits, it's essential to understand the tax implications of ETF dividends. Dividends can be classified as either qualified or unqualified. To benefit from the lower tax rates of qualified dividends, an investor must hold the ETF for a minimum of 60 days before the dividend payout. Unqualified dividends, on the other hand, are taxed at the standard income tax rate. The rise of ETFs can be attributed to their ability to combine the best of both worlds: the diversification benefits of mutual funds and the flexibility of individual stocks. While they do come with their own set of challenges, such as understanding the product's complexities and potential trading costs, many financial experts believe that the advantages of ETFs far outweigh the drawbacks. Now let's talk about why dividend investing with ETFs is the bee's knees. First, it's passive income. You earn dividends without doing anything. Second, it's lower risk because you're spreading your investments across multiple companies. And third, it's like planting a money tree that grows more money trees. You can reinvest your dividends to buy more shares, which in turn earn more dividends. It's the financial circle of life. Now I know what you're thinking, but I don't have a pile of cash lying around. Fear not, my budget-conscious friends. You can start investing in index funds with just $100 per month. That's less than the cost of a daily latte. Just set up an automatic investment plan and you'll be on your way to building your dividend empire. Alright, let's get to the juicy part. Here's a portfolio of 7 real ETF dividend stocks that you can consider. Vanguard High Dividend Yield ETF, VYM. This ETF is like the wise old oak tree of the dividend forest. It's managed by Vanguard, one of the most trusted names in investing. VYM focuses on high-yielding, primarily US-based stocks. It's great for those who want a steady stream of income. It's like having a golden goose that consistently lays golden eggs. It's like the king of dividend ETFs. The current dividend yield is approximately 3.24%, and the annual dividend payout is about 3.51 per share. iShares Select Dividend ETF, DVY. This one is like the queen. It selects companies that have a positive dividend per share growth rate and a 5-year dividend to earnings per share ratio of less than or equal to 75%. If you're looking for a high dividend player that has a good track record, DVY might be your first round pick. It focuses on high dividend paying US stocks. The current dividend yield is about 281%, and the annual dividend payout is about 327 per share. SPDR S&P Dividend ETF SDY. Imagine a family heirloom that's been passed down for generations. SDY is kind of like that. It focuses on companies that have been consistently increasing their dividends for at least 20 years. It's great for those who believe in traditions and want to invest in companies that have stood the test of time. The prince of the dividend world, it focuses on high-quality companies. The current dividend yield is approximately 2.6%, and the annual dividend payout is approximately 326 per share. Schwab US Dividend Equity ETF SCHD. The princess with a focus on high-quality dividend-paying companies that are known for financial stability and reliability with a long history of increasing dividends. If you're looking for the cream of the crop when it comes to dividend stocks, SCHD might just be the head of the class. The current dividend yield is about 3.57%, and the annual dividend payout is about 2.66 per share. Wisdom Tree, U.S. Quality Dividend Growth Fund DGRW, the knight in shining armor, focusing on dividend growth and quality. Instead of just looking at the now, it's looking at the future. It focuses on companies with high prospects for future earnings growth. This is perfect for forward thinkers who are looking to invest in the next big thing. The current dividend yield is about 2.12%, and the annual dividend payout is approximately 1.44 per share. ProShares, S&P 500 Dividend Aristocrats ETF Noble. The wise old wizard, only including companies that have increased dividends for at least 25 consecutive years. If you're looking for the regal and reliable, Noble might have a spot in your portfolio. The current dividend yield is about 1.94%, and the annual dividend payout is about 1.85 per share. Vanguard International High Dividend Yield ETF, VMI. The rogue treasure hunter adventurer, focusing on international companies that have solid annual dividends for years. It's great for those who are looking for hidden gems that have a habit of growing dividends. The current dividend yield is approximately 7.3%, and the annual dividend payout is approximately 4.75 per share. Dividend investing with index funds is like having a great mix of different foods for your dinner. It can be an amazing foundation and building blocks for your investment portfolio. It's a way to earn passive income, diversify your investments, and grow your wealth over time. And the best part? You don't need to be a Scrooge McDuck to start investing. With as little as $100 per month, you can jump into the exciting world of dividend investing. I showed you a variety of ETFs, but what if you want to potentially grow your money faster with high-yield ETFs? Check out our next video on the best high-yield ETFs for your portfolio.